Good evening and welcome to tonight's event where we focus on our CVVC Top 50 report. It's all about protocols. We're looking back and we're looking ahead. What's next? For those of you who don't know what CVVC is, CVVC stands for Crypto Valley Venture Capital. We are a VC with a plus and we have two specialities. Number one, we invest in startups that build products or services based on blockchain technology. It's the so-called picks and shovels approach. Number two, we have our own operational ecosystem business called CV Labs, which consists of co-working spaces, advisory. We organize conferences and run our own incubation and acceleration programs. This brings me to our investment approach, which is based on two pillars. Number one, for the really early projects in the pre-seed stage, we run our own incubator with a standardized offer of up to 20 startups per batch and investments up to 125,000 USD in return for 10% equity or tokens. For startups that are seed to pre-series A, we have a direct investment approach where we currently invest up to $500,000 USD. So far, we've made 37 investments, 27 came from our incubator and 10 were direct investments. For qualified investors who want to invest with us, we offer a range of investment products from pure play venture capital, where you get exposure to our portfolio of startups that build on blockchain technology, to a fund of fund approach covering the best digital asset investment strategies. Tonight we have two panel discussions for you. We are kicking it off with Ralph Kubli. Ralph is the author of our Top 50 report, followed by a message of Philipp Rösler. Philipp is the chairman of our International Advisory Board. The first panel discussion is an outlook into 2022 with a protocol focus. We have Bancor's Mark Richardson. We have Brian Gallagher of Partija Blockchain, Eternity's Yanislav Malahov, and the panel is moderated by Pascal Brun. He is a co-founder at AirGap. The second panel is called The Future of Web3, with Web3 Foundation's Bill Laboon, Near Protocols' Marieke Flamand, Anoma Network's Adrian Brink, and moderated by Marcel Robert Hamann, a co-founder with Tor Wallet. Without further ado, the stage is yours, Ralph.
Welcome to the Crypto Valley Top 50 report. The key facts are as follows. The valuation of the top 50 companies in Crypto Valley, which includes Switzerland and Liechtenstein, increased to $611.8 billion. That's over 400% more than only 12 months ago. The number of companies now stands at 1,128. And there are over 6,000 people employed in companies that relate to crypto and blockchain in Switzerland and Liechtenstein. 14 unicorns make their home in Crypto Valley. That's up from 8 in 2020. We saw the first large acquisition in financial services by an innovative player from outside of Switzerland. Also on the protocol side, we saw the first acquisition of a layer 2 protocol by a layer 1 protocol. Protocols and projects continue to set up in Switzerland and raise money thanks to the regulatory clarity that exists in Crypto Valley. In DeFi, some of the largest protocols count the Crypto Valley as their home and they continue to grow. And in the traditional finance space, the secondary markets built on DLT infrastructure are now live. Bonds are traded on licensed DLT trading facilities. Thanks to the best regulation in the world, a thriving ecosystem, and dedicated entrepreneurs, we can expect that the Crypto Valley will remain the global leader in blockchain and crypto for many years to come.
Hello everyone, and a warm welcome to an amazing event in amazing times at an amazing place. Amazing event? We are talking now about blockchain protocols. The good, the bad, the ugly of last year, but even more relevant, the future development. And in amazing times, because after the 30th birthday of Bitcoin, the global business community is aware that blockchain technology is way more than coin only. We can really push and lift the classical industry, the classical economy to the next level. An amazing place, of course. We are now here in Zug. Zug is the crypto valley in Switzerland, is the place to be when it comes to blockchain technologies. We have here, as you have seen in our CVVC 50s report, 1,228 blockchain companies, and 14 of them are already unicorns, and more to come. But on top of this, we also have many global headquarters of classical industry companies. And I'm convinced that the future for blockchain lies in a strong cooperation between blockchain technology on the one hand and the classical industry on the other hand. The digitalization was a sort of revolution for the classical economy. And what the digitalization is for the classical economy is blockchain for the digitalization. That's what we can now discuss. Again, a warm welcome from my end. Looking forward to lively panel discussions. And on that note, it's my own pleasure to hand over to our moderator, Pascal Brünn.
Hello, everyone. Very well. So we are waiting for Mark.
No, I'm here.
Good. Then we can get started. Welcome everyone to the Ecosystem Outlook panel. My name is Pascal Brünn, and I have with me Mark Rickardson, Banker's product architect, Brian Gallagher, co-founder of the Partija blockchain, as well as Janislav Malahov, founder of Eternity. Before we get started and dive in, maybe let's quickly get an understanding of your project. So let's do a short introduction round. Mark, do you want to start?
Yeah, for sure. Bancor is an on-chain liquidity protocol, and so it was it's one of the earliest in the DeFi space. It introduced ideas surrounding things like liquidity pools, bonding curves, and pool tokens, which have kind of become the three major concepts underpinning all of decentralized finance right now. And it sort of began as a way for token projects to establish, exchange liquidity for their tokens, so that they could have, organic price discovery for their token, and also give, the ecosystem a way to realize and exchange that value between other assets. So since then, Bancor has grown quite a ways. There have been several iterations of the project. Most notably is the release of version 2.1, which introduced concepts like impermanent loss insurance and single-sided staking. And we are approaching our version 3 release now, which is going to further iterate on some of these ideas. But at the highest level, Bancor is essentially a decentralized exchange that allows cryptocurrencies to be traded permissionlessly.
Cool. Janislav, do you want to continue?
Sure, yeah. My name is Janislav Malahov. I'm the founder of Eternity Blockchain. It's a new scalable smart contract platform. We have been working together with you, Pascal. In the past, it's been great to come up with the, let's say, the cold storage concept of the air gap wallets earlier in the days. Since then, the wallet space and the blockchain space really matured. And so Eternity is a scalable smart contract platform written from scratch in Erlang. It's out there as a public mainnet since 2018, and generally the amount of transactions which Eternity can scale to, this is something we have been always having a focus on, knowing that scalability is going to become a huge issue, as well as governance, as well as the consensus mechanism, as well as the smart contract language, Sophia, which is a functional smart contract language. And so we're trying to innovate on many of the levels which a protocol is made of. And we're excited about hyperchains, which is the kind of like the next consensus and scalability upgrade, which is coming in. That's a short introduction to what we're doing.
Very well, cool. Brian? I think you're muted.
Brian, you're still muted.
Thank you. Yes, Artesia blockchain is a layer 1 blockchain. Our specialty is in privacy preserving cryptography. So our background is Artesia, the company, has been building MPC software since 2008 for private enterprise and commercial use. So use cases are like with Bosch, we provide MPC technology so that they can secure the user data across their Internet of Things devices. Tora in Japan uses our MPC technology to run dark pool trading in sort of equity markets that are more mainstream. And so why we're building this layer 1 is because we are taking what's typically a private environment that runs MPC technology. You can think about maybe Fireblocks as the most well-known MPC use case right now, which secures the keys for crypto exchanges. And basically, we're open sourcing that technology and decentralizing it across node operators. So it's a more open network. And so beyond our layer 1, it's a interoperability play where the node operators are also powering a more decentralized, robust Oracle system that's allowing assets to transfer across blockchains. And the keys are managed in a similar way to how you could think of Fireblocks as managing private environments.
Thank you. So from my side, also to give a bit of context, I'm a co-founder of Papers, a Swiss mobile security and blockchain engineering company. We've already heard from Janislav, involved in different blockchain protocols in the ecosystems with projects such as AirGap, self-custody wallet solution focused on user experience and security, among others. So to continue here and dig deeper into like this panel, I think it's quite interesting to see that we have some like established projects already here that have been in the blockchain space for quite some. So from good to understand the vision essentially, if that has like changed recently over that time, or if it's still the same as when the projects were set out. So for Eternity, I think the white paper was published around 2016. So how has Eternity evolved essentially, or was there changes in that terms, Janislav?
The first drafts late 2016, the first public version probably in 2017. There have been some, let's say, adaptations, like in the sense that not exactly everything could be done as anticipated. For example, we were like thinking that the Cuckoo proof of work cycle could be done on mobile phones, kind of like more efficiently than on let's say GPUs or even ASICs. I mean, we still don't know actually whether there are ASICs for the proof of work we chose, but it's pretty clear that the original, let's say, anticipations of this proof of work mechanism wasn't fully met. So it's also one of the reasons why we are now working on the consensus upgrade with hyperchains, where we want to reuse the proof of work of the Bitcoin blockchain to make it possible that everybody can spin up Eternity-style side chains to the Bitcoin blockchain, and kind of like also provide Eternity-style smart contracts for Bitcoin. This is something we are now working on, which is like very different from the Cuckoo proof of work mechanism back then. But even back then, I was already publishing posts about essentially combining or timestamping a blockchain in another blockchain, or reusing proof of work called hyperchains. It's still like it grew, the concept grew, and lots of improvements, but some kind of like in the hindsight, stupid mistakes as well. Yeah.
Cool. So also for Banker, I think it also went through some sort of evolution, established when DeFi was not really called DeFi. Maybe Mark, just give us some insights. How did that happen? Where did you start? Where are you now?
Yeah, absolutely. So I think one of the biggest changes that our project has been through is this transition from something that is absolutely a centralized and fully regulated, legally compliant entity to something that is maintaining that level of regulatory and legal compliance, but moving towards a completely decentralized product. And so when we, first launched the Bancor protocol, it was very much seen as just an exchange, right? There was no special treatment given to you simply because your business is running on a blockchain. You required the same sort of legal team, the same relationship with regulators. And so, the Bancor Foundation was partly established to assist with this. And we've got quite a good relationship with FINMA, through the Swiss government. And there were things back then that you just couldn't do because it was encroaching on, encroaching on securitization laws. So things like telling users, right, regular people in cryptocurrency, that they could interact with the protocol as a liquidity provider and earn fees, right, for the action of doing that. That was considered, illegal, right? You can't do that. And in fact, allowing anyone to provide liquidity was also considered illegal back then, right? And look how far we've come. It was really, I think, the precedent set by Uniswap when they came out with a similar Bancor-like protocol, and did start just immediately telling people that it is completely permissionless and anyone can provide liquidity and you can earn fees and do all of these things. And so it was really at that stage that the Swiss regulator started to ease up a little bit on our project and say, okay, well now that we've got this this other project that we can compare everything to, and it doesn't look like any legal action has been taken against them, or it's it was causing discussions for sure, but it was it didn't look like anyone was going to go to jail. That there was a clear narrative that all of the decisions that were being made for Uniswap were in the best interests, right, of its community and of the people that are doing it. So that good actor argument was very easy to make. And that's kind of the precedent that we adopted. And FINMA was very happy to support us when we started to transition out of this, extremely exclusive product where if you wanted to be a liquidity provider, you would need to, sign the forms with us and register essentially as a liquidity provider with the Swiss regulator, to something that is now completely decentralized, and if anyone wants to provide liquidity, that they can. So yeah, I would say that from a legal and regulatory standpoint, the transformation has been incredibly rapid. And it's unrecognizable, I would say. Now, if we're looking back even just a couple of years, I'm not sure that the world has seen anything move that quickly with that much inertia, right? Like these financial regulations and laws are extremely old, right, and very well founded. And to have something that's kind of coming out of the gates, and I don't want to say challenging it, but cooperating with regulators to create something that is fundamentally new, and what the new interpretations are of these laws as we start to move into a more decentralized environment. But yeah, that has been a huge challenge for us, and it's exciting, and unlike many people in the space, I do think that regulation is an extremely positive thing, and that we should see it as a cooperation, not a battle, right, where we have opposing views. I think in general, everyone wants the same thing. And yeah, it's learning to cooperate and learning what both parties want to do has been the most transformative component.
So maybe, Brian, your Partija is really focused on privacy. Are there any like considerations also from like a regulatory perspective, or why essentially do you go into the niche or try to solve like the privacy aspect of a blockchain?
Yeah, sure. Well, the regulatory setup was definitely lengthy. It was a 15-month process for us to get our no action letter from FINMA. The main concern was actually around the interoperability play, because we are bringing other liquid assets onto our chain, and we refer to it as bring your own coin, and creating sort of a digital twins bookkeeping system. And so there was a bit of question marks around the AML KYC, like what if that turns into a Lightning Network style system, but that's not the way we built it. You actually just bring it over, and right now you're just paying gas fees and other transactions on chain with the various different coins. So the node operators are actually earning in liquid currencies, which is kind of cool. So it's a bit of a different model. If you're running a node, you're earning ETH or Bitcoin instead of either inflating currency or sort of fixed supply currency. So it's a bit unique in that regard. On the privacy side of things, the main concern was just, are you obfuscating transactions, which we're not. It's actually a focus on private smart contracts and also public smart contracts, and having both capabilities. Kurt, who's my co-founder, loves to really talk about, because Partija has been selling enterprise software for 14 years in this space. And a lot of the blocker for a big enterprise to enter public protocol is they need a level of privacy. Blockchain is too transparent for a company like Tiffany Jewelry to run their entire supply chain on a public protocol. It'd be cool for the vendor network, because they would have this tamper-proof ledger where all the vendors can, see where various goods were checked in along the supply chain. But if a hedge fund reverse engineers what's going on there, then they're able to sort of front run the markets and trade on publicly traded stocks. So big enterprise needs a private layer to be able to sort of start moving into public protocols. So you can think of like, Dubai Ports World, for example, has, hundreds and hundreds of different vendors across, I think they have 42 ports, and they want to be using blockchains to really be efficient and more transparent amongst the different vendors what's happening. But they need a way to sort of manage keys where only certain vendors get access to certain views, and maybe like, one-time pads so that you can like see things one time before they, unlock like some encryption one time and see data, but then it's sort of gone, so it can't be like accessed again by a different party. Like they need these types of systems. So that's sort of where it unlocks use cases that brings potential, that's way bigger than just what's being done on blockchains now.
Yeah. Janislav, maybe for Eternity, how do you see like privacy? Is that playing also an essential role, or do you see that differently?
No, absolutely. I think privacy is a human right, and things which are private should stay private, and things which are supposed to be public should be public, including, for example, also tax money. Like, I wonder where this money is going. It would be great to fully track it on blockchains, as well as also hook up the regulator with blockchain and yeah, have a more transparent, more efficient, more instant system, which is also more fair and probably also more global or inclusive for everybody. And yeah, privacy, as I said, is a human right. And yeah, here's now, where do we draw the line between private and public? I guess that's a really tough discussion, which is on top of our panel here sometime. Yeah, for state channels, for example, state channels, the smart contracts can stay also private there, and also with hyperchains. The idea is that the hyperchains can be also run privately, firewalled, or otherwise the authentication can happen in another way, additionally to the cryptography. And also that's still with the hyperchains that the state essentially is still timestamped on a public ledger without revealing anything about the private internal state of this ledger. So yeah, privacy is important.
Maybe Mark, for a banker, does that also play like an important role, or how do you see that?
Yeah, so I think the conversation surrounding privacy, particularly as it relates to exchange of liquid assets, is really interesting. I agree with Yanni that the privacy is a human right, and it's okay to assume privacy, but it's not guaranteed, right? There are some things where it is actually inappropriate for someone to expect privacy in what they're doing. And this is often, for example, when they've been entrusted with assets that don't belong to them, often, right? Or something that is extremely, security or regulatory sensitive. So, for example, when you're exchanging hundreds of billions of dollars in like health insurance, for example, it's right to insist that this be highly visible, and for people to, for some of these very large institutional players to want privacy when they're conducting those kinds of transactions, often is why regulators are kind of looking at the types of flexibility that it affords them with skepticism. And I would say that that's well informed. And so I do think that probably there will be a version of DeFi as it exists today, where there is something like a fully KYC AML compliant branch that caters exclusively to these kinds of regulatory sensitive assets on chain. So I think that community members in DeFi right now, they get kind of concerned when they hear about KYC AML, because they wonder if it means that they're no longer going to be able to swap their Bitcoins on Uniswap, right, or swap ETH for Dogecoin, or whatever it is that they're doing. They don't want that to be interrupted. But I think that what they're missing is that regulators don't really care what they're doing with their ETH and Bitcoin. The regulators are more sort of forward-looking and are more concerned that some private bank or something might be able to get a huge amount of insurance off of its books or something without anyone paying much attention to it. And so I do think that we will see new tokenized assets that represent sort of real world value, something like, and it could be even things like NFTs for, certain insurance contracts, or, something like a tokenized mortgage system or something like that. And I do think that these, because of the scale of it and the potential to cause harm, that privacy won't be, actually anti-privacy, right? It'll be visibility that is a huge concern for making sure that those markets perform well and in a regulatory compliant way. But I do think that in general, like the individual, right, the private citizen, what they choose to do with the assets that they own, that should be protected. And I think that they are right to insist that that be private. So I do see these as two separate things. And I think that we can have a private permissionless DeFi, and I think we always will. But I also think that we will have a permissioned KYC compliant DeFi that is tailored for sort of, institutional and government use.
Yeah.
And that won't be private.
Right. So, Brian, DeFi on Partitia, is that a topic? So private DeFi?
Yeah, it's like Mark alluded to, actually kind of I don't want to say like the approach that we're working on, but the more interest from our early contributors is in that more regulated DeFi arena. And I can't say too much, but really it's just about, it's still a custodial, more frictionless way to make trades. And, if you're doing it for 1 cent a transaction, that's better than trading on like Charles Schwab or another one of these institutions. So as long as you can support, the transaction bandwidth, which we can, we right now run 3,000 transactions per second, but it's a sharded protocol. So we can just scale that up by adding more shards. It's not obviously like a perfect scenario to add more shards. There's work involved, but yeah, we're an infrastructure provider, the foundation. So in terms of applications and use cases, we do some work, as well in that arena, but it's more some of our early contributors who are working on some things. But like Mark said, it's about whitelisting public keys to interact with smart contracts. So it's kind of like you can have a public protocol, but you can have permissions smart contracts. It doesn't have to be like a one size fits all. So the design is basically, the assets are flowing around, but these specific smart contracts are whitelist only. So if you're not approved by a third party network and, allowed to be trading inside of this contained environment, then you're not allowed in. So there's like permission DeFi, but this early in the game, it's about, maybe these new public protocols like Partisia are able to support the type of transaction bandwidth that like, Binance does. Maybe, we're running it now, but who knows if it holds up. And if it can, then maybe that's a better solution. That's just a bit more frictionless and like non-custodial.
So, Yanni, for Eternity, do we see like a banker or also more private focused DeFi on Eternity soon, or what is your approach there?
Yes, so DeFi or Eternity is kind of like meant for DeFi. There are oracles built in also like as part of the smart contract language, as well as the state channels work really nicely with, let's say, building a scalable DeFi exchange for derivatives or bets or anything which requires lots of kind of like quite standardized short, small financial contracts, which you can also then prove with methods of formal verification quite nicely because it's a functional language, so it can be way more safe that the software has certain properties or it can kind of like inspect it from different angles. So DEX is launching very soon with Eternity blockchain building upon and so looking forward to also have more DeFi projects. We're actually planning a DeFi hackathon and also a DeFi kind of like conference in a special location.
Very cool. So we're already nearing the end of the half an hour, and we have a few questions from the viewers. Maybe going to Mark for banker and in general for the blockchain space. How does mass adoption? How do we do that? How do we plan for that? Maybe a loaded question.
Well, yeah, it's a huge question. There are a couple of things that I think need to become they need to be fixed before like mass adoption becomes a reality. I will point out that I think that we're already sort of starting to see the early signs that mass adoption is beginning. I think that the last count from the UK, for example, is that something like 15% of its citizens now own one type of cryptocurrency at least. Now, whether or not they're actually doing anything on chain with that is slightly different, but that's kind of the first step, right? Get a relatively large minority to interact with some centralized exchange and exchange, value for a cryptocurrency. After that is where all the bottlenecks start to arrive, right? Teaching people how to use MetaMask, teaching them about, how to secure their private keys, as a relatively public-facing member of the Bancor team. I hear all the time, people approaching me saying, what happened? All of my money's gone. And, we go through the chain and it's like, well, they were using a hot wallet and they didn't secure it correctly and some hackers stolen their funds. This is extremely difficult because, they not only are we trying to encourage people to use this space and we want it to grow and flourish, but we also need to make sure that we are being very careful about how we educate them, right? And make sure that they're ready and accept, some responsibility, I think, for making sure that they're secure when they do these things. Mm-hmm. And so I think that some of this friction needs to go away, right? I'm not sure what the solution is. I don't have one yet. But making sure that people are much more security aware when they interact with smart contracts and that they know, at least how to choose between, a project that is obviously, a criminal enterprise and is just trying to scam people out of their money from a legitimate DeFi project that's trying to do something new. Yeah. These are all issues that we need to get out there. And I think that continuing to talk about it, right? It's why I do these panel discussions and AMAs all the time. As the general knowledge of the space increases, I think that mass adoption will start to look a lot more feasible.
Yanni, if you would have one sentence to solve mass adoption, what would the answer be?
Have a way to give a fair amount of tokens kind of like equally to everybody on planet Earth, if this could be like solved, and giving like everybody a digital identity which is like secure, then I think we could do really cool things, and there's no more saying no, like it's really fair.
That's an interesting answer. Brian, for you, just really quickly before we sign off here.
Yeah, you need the infrastructure first to be able to support 1 billion people, which is getting closer by the day. And second, you need a genius to solve a massive problem.
Okay, I see. Good. So yeah, I don't think we will find directly the answer in 30 minutes. I think also more than one sentence needs to be spoken about this before we can solve that. But I want to thank you for attending this panel. It was really interesting. Hope we can do this again, have a bit more time to dive more deeper into like where we were and where we essentially moving ahead with the blockchain space and how we can solve problems like mass adoptions. So without further ado, I would hand over shortly to the next panel, which would be the future of Web3, which should start shortly, and I would sign off here. Thank you, everyone.
Thank you.
Stay tuned.
Thank you, Pascal.
Yeah, thanks, Pascal.
Thank you, everyone.
Awesome. I think we're good to go. Then welcome everyone to the second panel of this afternoon. the future of Web3, the good, the bad, and the ugly. So with Web 1.0, we had like static websites and we were consumers of information. And with Web 2.0, things got a bit more dynamic. Users were more involved with creating content, big platforms were created. And now with Web 3.0, the World Wide Web is moving towards a decentralized digital infrastructure based on blockchain technology. And today we're going to explore the future of Web3 with three thought leaders of the industry. That's Bill LeBoon, Director of Education Community of the Web3 Foundation, Marieke Flement, CEO of the NEAR Foundation, and Adrian Brink, founder of Anoma and HaleyX. So thank you so much for being here. Maybe quickly, thank you. Maybe a few words about myself. My name is Marcel. I'm one of the board members of the Crypto Valley Association. I'm also course director at HSLU, the University of Applied Science Lucerne, one of the founding members of the Crypto Valley movement we're in. There, I'm a course director for 3 months deep dive further education courses, the certified certificates in advanced studies in blockchain, and another one in crypto finance and cryptocurrencies. And I'm also the CEO and co-founder of Thor Wallet Dex, the first non-custodial mobile wallet with integrated cross-chain DEX, where you can swap native layer 1 tokens across chains and earn passive income on your unwrapped native layer 1 tokens, such as Bitcoin. Well, now I actually like to kick off with a short introduction round where everyone can give the audience an idea who you are and what you do. And I would say we go ladies first.
I always get that. Hi. Great to meet you guys. So Marieke, I'm the CEO of the NEAR Foundation. I've spent most of my career actually working in tech and working around the globe. I actually started my career for luxury conglomerate LVMH, and then after that moved more towards tech. I started working in crypto and in blockchain for Circle back in 2015, 2016. Circle, which is the company which emits in particular USDC, one of the largest stablecoin. And after Circle, I worked for Metal, which is a neobank. So I've been back into banking, and you can say Web 2, although maybe Web 1 version of the world, and now leading NEAR Foundation. And so NEAR is a layer 1 protocol. We are proof of stake, and we leverage sharding, which makes us actually super scalable and super fast. And we're also very, very focused on usability. So usability for users, but also usability for developers. And I'm sure we'll come back to that. And as a foundation, what we focus on is the flywheel, is how can we actually attract talents to create great projects to then get ultimately to mass adoptions and lots of users. So that's on my side.
Awesome. Thank you so much for being here. Maybe Bill, you want to go next?
Sure. So my name is Bill LeBoon. I'm the Director of Education and Community at Web3 Foundation here in Zug, Switzerland. Before this, I was teaching at the University of Pittsburgh in the computer science department. I'm probably one of the few people who got interested in cryptocurrency because I was really interested in hash algorithms. So that's was my, when I heard about a new currency that was using hashing a lot, I got very interested in it. So my job here at Web3 Foundation is to help people understand blockchain in general and cryptographic and distributed ledger technology, but more specifically in the Polkadot ecosystem. So I release a lot of information, and my team does as well, teaching people about how to use it, interacting with the community about it, and of course, thinking, as we'll be discussing during this conversation, about the future, where we're heading, and how Polkadot can be a part of it.
Awesome.
Cool. Yeah. Hello, I'm Adrian. I'm one of the founders of Anoma, and really at a high level, Anoma is a system for economic self-sovereign coordination for all humans on the planet, as well as a tool set around privacy-preserving protocols, because you need privacy for democracy to fundamentally actually work. and for human interactions to mostly work. I got into the space, I think, on a very different path than all of you, which is I wrote my graduate thesis on censorship-resistant e-voting during the time of the Catalan uprising and the Tunisian, the Arab Spring. And I predominantly got into blockchains and interested in them for the censorship-resistant tech, because it was sort of the first time that we could build election protocols that allowed people to vote independently of whether the government liked it or not, under the assumption that, you know, if 90% of a population vote A, there's really nothing a centralized government can do to prevent A from happening. Yeah, so this is how I got into the space. This was early 2016, I think. Built a bunch of companies at this point. We built one of the very first proof-of-stake validators called Cryptium Labs in this space. And yeah, now with Anoma, it's really about what does the future hold for blockchains as a whole? Like, how do we make this applicable? How can we help societies actually sort of persist long term? How do you make democracy more resilient? How do you financial privacy and like fight against surveillance capitalism to people? So Anoma fundamentally, actually, Anoma is fully asset agnostic. Anoma doesn't care. Anoma just wants to like bring privacy preserving tech and coordination mechanisms to everyone, no matter what assets you want to hold.
Awesome. Thanks, everybody. So the panel is actually called The Future of Web3, the good, the bad, and the ugly. So I'm interested, how do you actually see the future of Web3? And I think this is actually a question, well, everyone in the panel has an opinion, and everyone listening is actually eager, you know, to know from your perspective, what is the future? So maybe everyone can, you know, give an answer to that. What do you think?
Yeah, I think privacy is I mean, there are many themes here, right? You can talk about a lot of things on that, how Web3 is going to evolve, but I think so a major theme that we're going to see this year and the next year is privacy, for a number of reasons, actually. I mean, one, I think transparent blockchains are very easily, from a government perspective, a national security risk, because you're leaking all your citizens' financial data to foreign powers. This is like not a good model. No one would have adopted the banking system or was on a public ledger. On the other side, I also think privacy is going to be humongously important, because individuals have a capability to stop being tracked and micro-targeted by companies like Facebook and Visa, which arguably creates a lot of the information bubbles at the moment that people live in. As in, like, everyone sits in their own filter bubble because Facebook knows everything about you and can like target you down to the second. And I think a lot of the privacy tech is going to move in that direction. I think scaling wise, actually, it's maybe I think they have a very different opinion than the rest of you. I think scaling is actually not a problem. I think like globally consistent state machines are kind of not that needed necessarily, because the like coffee transactions in San Francisco don't need to be globally ordered. With the coffee transactions in Berlin, this can happen sort of on demand if you need to move assets from Berlin to SF. So you can have like blockchains running in parallel. And I think the model is going to be that we're going to see thousands of L1s that just interoperate very seamlessly, that focus on different geographies, different cultural closeness, like the World of Warcraft community may start trying their own systems. So I'm not a big believer in like these shared security sharding systems, because I think they try to force everyone into the same security model, into the same scaling model. And I'm not sure, like, this is not how humanity is structured at the moment. And I'm not sure that we are going to be structured like that in the future.
Yeah, maybe to give a different perspective. So I think a couple of things. Number one, Web3 is a jargon term. And I think actually, you know, the end user doesn't really care about that. But I think what's happening, if you look at the global perspective of where we're living, and actually building on what Adrien was talking about, but we are at a juncture in time, right? There is a major climate crisis, there is rampant inflation, there is trust in institutions that is actually shifting quite rapidly. There is a need for living and actually wanting to work differently and not necessarily having 9 to 5 and having the jobs that have been known as the way to work. And there's also a shift in like political order, right? So to me, we are at a juncture in terms of what's happening in society very broadly. And the question is, what does technology do for that? And within that context, actually, when we think of blockchain and decentralization, what are some of the use cases that actually are going to arise from that? I think what's fascinating to see is, and we're still super early days, but DAOs and reinventing how decisions are done, how people actually self-organize and actually decide to make decisions on things that are close to their heart, whether it's actually voting on things that they want to, or actually participating in using and leveraging assets. I think that's fascinating. I think the premise and the paradigm shift also for artists is fascinating. If you think of actually NFT, and whether it's actually for musicians or for artists who before were going to galleries or have to go to someone who will keep most of the interest of what the money is that they will make, I think those are a paradigm shift. But the thing is really like the jargon we're in and what we use when we talk about it. For me, what's actually fascinating is we'll really get to a future when it makes a real difference for the end users. And those two use cases, for example, DAO and NFT, I think are super powerful to continue to have like real adoption on that.
Yeah. I agree with a lot of what was just said. But I think from my big takeaway, I think of what's going to happen with Web3 from the user's perspective is that people are going to stop seeing it as Web3. As was just said, it's sort of a jargon term. I think that some people, in some ways, right? I think we're going to see it more and more intertwined with the rest of the way the internet operates. That just like we no longer see cryptography as some special weird thing, but rather every time we buy something online, we just use public key cryptography, right? We use HTTPS. We don't think about it. And I think that a lot of these technologies are just going to become sort of seamless. They're going to start interoperating more with Web 2. We see this with Twitter, right? With the NFT profile pictures, and you can see them from Twitter without having to know anything about how Ethereum works or where these are stored or IPFS, et cetera. And I think we're just going to see more and more of that, since technology tends to move towards things that are more open, more secure, that provide more trust, and we as technologists will understand the details of that. But from the end user perspective, I think it's going to become more and more transparent and more intertwined. They won't have to think about it. They won't have to think about a specific chain that a service is using. They'll think about just that they have more security, or just, hey, that's the technology that the service I'm using uses. I don't have to think about it.
Nice. Yeah, I pretty much agree on everything you said here, and maybe just following up with you, Bill. What do you think is needed in education to have further adoption?
So I as someone coming from an education background, I may be a bit biased in terms of how much education I think is necessary. But I do think that people need to understand that right now using blockchain, it does require you're learning some things. At the risk of sounding too much like an American, I'm going to use a firearm analogy, right? If you buy a gun, right? It can be a very useful tool if you need it for hunting, but it's also very dangerous. And that is, blockchain is a very dangerous place right now. And I think teaching people how to be safe in it, and not just from like scams, like Mark from Bancor was talking about in the previous panel, but also just, understanding how to interact with smart contracts, how not to send to an incorrect address. I think that understanding the basics of like how blockchain works, how you can interact with it safely, is something that we are working towards. We do a lot of, but I also think that just like you can provide safeties and things on guns, from a usability perspective, developers of technology that interacts with the blockchain, we can also work on that and making sure that people understand how to use these safety features. But I think that this is a big part of educating people, which is how to be safe when using the technology.
Actually, I have a great anecdote that I had last Sunday here. Someone that just was new to the Ethereum ecosystem and had bought an NFT and put it on Twitter. And so I spoke to them about it, and they're like, "Oh yeah, this is like totally fine, right? Because this is fully private." It's like, yeah, no, you just doxed your entire financial history of everything you will ever done and ever going to do from that address on Ethereum in like a very easily trackable way. And they were incredibly surprised because the intuition that you have when you see a hex address doesn't match the reality of what's happening under the hood. And I think on the education side, this is something that like people need to have the right intuitions when it comes to these systems in terms of what properties they offer you, right?
Yeah, I totally agree on that. And even maybe I would put another perspective regarding security. So blockchain basically was invented to be a decentralized system. But what happens if you use the technology from a centralized standpoint of view and you create a CBDC? And right, you always have two sides of the medals, and you need to educate people. What does it actually mean? What are the pros? What are the cons? It's a great technology, but you need to use it the right way, I believe. Yeah, totally agree. So maybe moving forward, Marek, what do you think is needed to onboard more people to the Web3? So now we had a little bit of education, but do you think there is other things that are needed?
Yeah, and so I agree, by the way, with Bill. I think education is fundamental, but I think there's three things that are needed. Number one is actually public opinion and awareness, and that's linked also to regulatory agenda. But today it's still too jargony, right? It's very difficult to actually wrap your head around what's going on and to have something that is layman enough so that people can understand. The public opinion agenda is still very, very focused on crypto, mostly on DeFi. And actually, that's not necessarily what are the exciting things that can happen in terms of, NFT and DAOs and ownership for example, again, for creators. So that's number one, is like shifting the public opinion. I think number two is actually usability is fundamental, right? I keep going back to that, and it was really interesting to hear what you guys were saying. And I'm not sure I fully agree. We say a lot, people have to understand. Do they? I think, at some point it's also like, technology becomes really usable when it's seamless. And I think right now we are expecting to get mass adoption, to have things really complex, honestly, to be understood, right? So private keys and what is it and what do I do and so on and so forth. And actually, I think that's a problem to solve, right? This is not currently usable to be actually having mass adoption. And when I think mass adoption, I think my parents, how can we get to having my parents actually use blockchain in a way that is seamless, that is safe and secure, so that they actually do things that help solve real problem for them and in a seamless way. Usability, I think, is also for developers. Today, we still see too much, and that's one of the things at Near that we focus on, but we still see too much. You need to be like, a super ninja developer to be actually able to do anything on most, in particular, layer one blockchain. And I think you don't get to mass adoption unless you can actually shift that and change that. And the importance on that front is actually the third pillar, which I think diversity of thoughts, of backgrounds, of geography is absolutely fundamental to make sure that the space can get to real adoption, because ultimately we put all our biases into the technology that we build. And one of my worry at the moment is like making sure that we actually have, not just like groups of similar individual thinking, but actually can broaden that space and have very different background within that. And that means localizing in local languages. And that means actually back to education, but making it again, palatable and understandable in different regions. So, those three things: public opinion, awareness, usability, and diversity are, I think, the three pillars that ultimately will be needed to get to mass adoption.
Nice. Maybe I'm just checking the questions that are coming in, and maybe that's also something for you, but others can jump in. So there was a question: if Web3 is a jargon term, then how should we refer to all the related global changes that are happening? Because indeed, and as you just mentioned, there are many things that are moving around the status quo. So is there a better term than Web3?
Yeah, and I think it's a great question. I'm not going to pretend I have a better term. I think usually what's helpful is to go back to what does it do ultimately for end users, right? And if you think today, I go back to a creator, if you actually create content, for example, on Instagram because you're an influencer, that content doesn't belong to you. And actually, if Instagram changes the platform, you lose all the content that you've put out there. I think it's through examples that we can really start making up what it does and what it is. But I'm curious to hear if others have, better thoughts for like, what should we use instead of Web3 if Web3 is too jargony?
I want to jump in. Sorry, a strong opinion on this is that, even though that I said, it can be a jargon term, that a jargon term doesn't mean that it's not real or that, it doesn't exist. But what I mean is, you just like, so AI, right? AI can mean anything from like GPT-3 to like some simple K nearest neighbors algorithm, right? And they're all under this rubric, right? Just like Web3 is really under a rubric, or like, there's a lot of different things, right? Different, not just blockchain technology, right? But other, cryptography and privacy enhancing technology. So, I mean, I think in a sense, jargon, at least is the way I say it. I just
Most
mean
of CKPs at this point.
I'm sorry? Yeah. Like it's
Sorry,
very broad. Yeah, it's very broad. There's lots of different sub things, sub things underneath it, but that doesn't mean that it's not an actual thing and that we can't refer to it as that.
Yeah, absolutely. I don't see it as something bad if we use a jargon term.
From my side, I would push back on. Yeah, like I'm more thinking like, what was the internet in 1995? I think to most people on the internet, like in the world in 1995, no one knew what the fuck was going on and what like TCP/IP was and why the cool nerds were talking about TCP/IP and being able to send these like weird things called emails to people and like use bulletin boards, right? None of this made any sense. And I think just on the adoption curve, like the money has brought the expectation that like this stuff is very well specified and explained and understood and developed. But practically speaking, I think from a tech perspective, we are in like 1995. This is like the first couple of usable things is starting to appear. I don't actually think we've seen like the major breakthrough that sort of gets us to global adoption, right? I think that is still to come. So like most people really like they hear about blockchains and they think, yeah, this is jargon. These are all nuts. They have no idea what they're doing. But like give it 5 years and we'll see where we're at. So I think the jargon goes away over time as like this enters more and more the mainstream because more people start using it.
Yeah, and I think actually just bouncing on the buzz, I mean, Adrian and I are at East Denver. It's phenomenal to see the number of ideas that are coming up in every conversation at every corner. So I think, we haven't had yet the breakthrough case, but they're coming and you can see the excitement. And I imagine in 1995 was pretty similar, actually.
Right. I want to circle back. It is early indeed. I want to circle back to privacy, maybe for you, Adrian. You mentioned before privacy important. Maybe you can, dive a little bit deeper, give the audience like some hands-on explanation. What do you think can we see in maybe 3 months, 6 months, or down the road regarding to privacy?
Yeah, I mean, there are a couple of themes here, and I'd just like to also connect to what was said before around we shouldn't expect people to understand what the underlying tech does. I agree. The thing is, if we don't expect people to understand what the underlying tech does, we need to change what the underlying tech does to fit the intuition people have just by looking at it, right? Like if we're saying we don't want to explain to people how public and transparent most blockchains are, we probably should make them private because this is what would match their expectation. Otherwise, we're setting these people up for failure because 5 years down the road, they're going to be fully doxxed, right? I think this is just an important phrasing or framing where if we don't want to educate people, we should change the way the systems work so that they match the intuitions people have about them. I think with regards to privacy, it's going to be pretty exciting. I think there are a couple of themes here. I mean, one is privacy on an individual level is what allows you to fight against Facebook. It is what like makes micro-targeting very, very hard because if your data is private, Facebook can't put you into your own filter bubble where they show you the most enraging content all the time. So it's really something that like levels the playing field between individuals and large players. And arguably, to some extent, actually, the traditional systems are a lot more private. Like a couple of large companies can exploit a lot of the data that's available, but at least not everyone on Earth. Like imagine if we moved world finance to Ethereum or Near or Polkadot, it doesn't matter, like any public blockchain tomorrow, it'd be a terrifying world. And I would expect that every government is going to ban this immediately. Because at that point, any random dude in Russia with an internet connection can run the same kind of global surveillance program that the NSA runs at this point. Like this is not a good model. I think there is almost zero likelihood that blockchains get major traction in the world without us building in the rail guards, the handlebars for people to be protected from exploitative paradigms, which are just a lot easier in transparent systems. So I mostly worry about this from the end user perspective, where if we don't do anything about it, we're just setting up the next 100 million people for incredible failure, because they don't get what they're expecting and they're just going to be exploited. I think 2022 and 2023 is really cool though. Like Zcash paved the way in 2017. A lot of the ZKP stuff is coming out of pure research and starting to go into production. Now you're starting to see this, what we're doing with Anoma, with Alio, Starkware, Orchard from Zcash. I mean, there's a lot of cool stuff happening because they become a lot more feasible. I think the other thing we're going to start seeing is that we're going to start seeing many more programming languages that compile to zero-knowledge circuits. You have Leo from Alio, you have Cairo, we have Juvix. So you have all these kind of languages that make it a lot easier to write privacy-preserving tech. And I think this is going to allow way more people to participate in also building these systems and experimenting. So I'm very bullish because the tech is getting exponentially better at this point. And I think the rest of the world is going to move way too slowly to prevent this from happening.
That is good news. Privacy definitely key. There was actually another question coming in. Everyone who feels comfortable can just pick it up. So where do you see actually the biggest challenge for everyone right now, or the Web3 in general? What do you have one main challenge?
I would say regulation, I think, is a challenge, and it's definitely a place between fear and not fully understanding. And I think that's a challenge to navigate. It's a challenge to actually know what's the right thing to do and where are the boundaries. And I think on that front, proactively engaging, because it's not as scary as it looks, I think is super important. But that's the one thing I would say from my end.
Yeah, I think a big challenge that we see is usability, and people's intuitions, as Adrian said, just don't line up with the way things actually work. And so we see, and I don't know that we as an industry have done a perfect job of explaining those, but but I think that through time people will get these intuitions, just like they got the intuitions of how computers work and how networking works. But that is a slow process and a challenge now.
From my side, sort of tangentially to blockchains, but I think it's a problem that actually blockchains are very well set up to solve, is I randomly walked into a Senate session in the Colorado State Senate 2 days ago, and it is terrifying. Like anyone that you should visit your local democracy, your local Senate, your local parliament, and see what's going on. These people aren't going to save us from shit. This is really the realization I had this week. These are all 65-year-olds and above, and they have no way how to tackle global problems. At this point, I think blockchains are probably a very good bet to start tackling some of the larger societal issues. And also on the regulation side, this is the other thing. These people aren't going to effectively regulate things because they're 5 years behind the tech. The other thing is, I think I'm worried about the Ponzi's. Actually, I'm worried about a lot of DeFi and also to some extent a lot of the NFT space, because it seems like just a cash grab thing. They don't provide fundamental utility to a lot of people. They're to have a derivative on top of derivative on top of derivative and call this a cool Ethereum smart contract that makes $100 million is very nice, but doesn't fundamentally change anything in the way these systems work or in the way that people care about using them. Right? My people don't need, my parents don't need under collateralized loans or some yield farming opportunities. But so we should not lose focus on what the majority of the world needs when it comes, and instead focus only on DeFi and NFTs. So I'm very worried that the space is really focused a lot on DeFi and NFTs at the moment, without sort of thinking, does this solve problems for a majority of the world's population?
Awesome. I think those were actually good closing words. Let's focus on the important things that matter for the world. So that said, thank you so much for joining tonight, and I wish you everyone a good afternoon, good night, good day, wherever you are.
Thank you for having me. Have a good day. Bye-bye.
Bye.
Bye-bye.